Hello, it's Ben at Forexample. It's the 24th of July. It's a Tuesday. We're middle of the week and nearing the end of the month, but not quite near enough to start benefiting from the activity in the markets, which usually occurs near the end of the month. So what I decided to do today was do a video. I've had a few of our newer members predominantly asking about how I go through my analysis. What do I do to get to the point where I'm sending a signal or placing a trade which generates a signal? And there's a very simple process I used, and the truth of it is I used to use much more complicated methods. I'd have different indicators on my screens. My charts were pretty messy, in fact quite difficult to make head nor tail of if you didn't know what you were looking at. So what I did when I started training people, I had started doing the webinars and I was actually educating people on how to trade, was simplify everything. I stripped everything back and I kept it as simple as possible for the main reason that it helped people to understand. But what I found is that it actually improved my results. My results started getting better through having less aids and indicators and things that I thought I was reliant on. So what I'm going to do today is go through and I'm going to show you how to carry out very simple market analysis and then trade identification. So what essentially I'm going to do is I'm going to go through the major pairs, the US dollar pairings, and we are waiting for a move from this US dollar, which we have been doing for a good part of this month. It did move massively, but now it's kind of dropped back a bit and we're waiting for that to happen again. It's imminent. We don't really know when it's going to happen. So the point is today is pretty slow. I dropped a couple of trades this morning and I always think it's best if that happens to just step away, carry on looking at the markets, but if you want, but decide that you're not going to place any further trades, because if you carry on trying to chase those losses, they'll just start compounding. You'll end up with lots more. So today we're going to look at simple market analysis, how to scan the markets fairly quickly, certainly in the major pairs. And if you go through these and there's still nothing, you can start looking at the minors and the exotics after that. But these are the ones that I'd always look at first, and especially in the market. So it may be that we come across something that looks good enough to place a trade. And what I'm also going to do once I do that, so we'll go through market analysis, trade identification if there is anything, but we'll show you the process leading up to a point where I place a trade, and then exactly how I generate the signal. And I'm also going to show you if it doesn't drag on too much. I haven't really timed how long this is going to take, but I will also show you how to set up the MT4, but I might do that in a separate video which will come just after, just so that they're more digestible when you're watching them. So for this video, market analysis and trade identification, I'm first of all going to pull up my trading view charts, which are here. And first things first, always have the dollar index open, the Dixie here. If you've got this open, you can see what the dollar's doing. Now, every single one of these pairings or these charts will be a daily chart. So each of these candles represents 1 day in time. And you can see this one's hovering between 94 and 95, has been for some time. There's been quite a lot of movement in this. It's quite difficult to tell if you're a beginner. Doesn't look like there's a lot of movement here, but when you start breaking it down into hours and then minutes, these are big movements and they can generate big returns, but they can also cost you money if you don't get them right. So we've got to get them right. But the point about the dollar index is that if we know what this is doing, it's going to help us to understand what everything else is doing, because the US dollar is pivotal. Imagine these currencies like the solar system, and the US dollar is the sun, and everything else kind of revolves around it. Okay, so if you're watching, if you're watching the dollar index, it's going to help you to have an idea what everything else is doing, because it will hinge upon this in some way or form. So here we are with the dollar index. I'm not going to focus too much on that, but it's worth having it open. If we change it to a 4-hour view, you'll see here what we're looking for here is points, key points here. So this blue line is a blue line that I have on my charts. With this would be my entry point essentially. If you see one of my signals, this color blue line indicates the entry point of that trade. And I'd be looking on this one. We can see it's starting to pick up again now, and I think this will carry on going. You can see it's bottomed out around here, so we could have jumped in at this point, but I think it's too early. And what we want to start seeing is as uniform as we can get candles running side by side. Now this is moving quite quickly now, so my point of entry on this one would be here at 94.5. All right, that's where I'll be looking to possibly enter a trade. We'd be better off if we look at a 4-hour trade. Maybe at around this level here, so probably 94.6. okay, and the reason for that is I'm just going to change that so that it is on 94.6, and the reason for that is you can see where there's a lot of interest around these areas, yeah, and when it breaks past this area, or certainly enough past it, it tends to carry on going. You can see here, I don't need to indicate the arrows, you can see very clearly it breaks away here, and here once it gets past around this level. All right, so I've set that there. And what this means is we know that once the US dollar gets to that level and it breaks past that level, okay, so we'll be looking to take US in favor of US dollar trades in this kind of direction here. All right, so up like that from that point. Now I don't expect it to reach it on this candle, actually on a 1 hour, probably reach on the next. But that means that we can then look at US dollar pairings and we can take US dollar favored trades, all right, once we know the dollar index is strong enough to support those trades or those movements against other currencies. So very simple. I have my majors, then minors, and then I go into exotics, but very rarely do I look at them, to be honest. I tend to focus on these pairs with the most liquidity. That means you're going to get better spreads. If there's more liquidity in the market, you're going to get better spreads on your trades. The broker will offer more favourable spreads for you, okay? If you're starting to look at the exotics, and the spreads can get pretty big just because there isn't the same liquidity in the market, all right? So always look at the majors first. Now, the euro US dollar, this one, and as we can see here on a daily chart, look, this looks absolute set to bust away to the upside here, and this is on a daily chart, so we'll always start on a daily chart, and then as always I'll just put this marker in here where I believe a point at which we want to be interested in placing this trade. It's quite hard to tell on a daily chart, but this to me is going to be moving upwards. All right, it's been trying to for a while, you can see that. So what we're having to do is take trades on smaller time frames in the daily charts until it does break away. But remember, once we've got that trade in place, if it does break away something like this, then we can leave it in there. You know, we give ourselves a bit of breathing space. We can leave the trade overnight, and that, you know, that allows the trade. It gives it room to breathe. You know, that's how I like to put it. Once you're out of that area near your stop loss, you can really allow that trade to go on because you're already in the profit by then. Okay, so changing to a 4-hour chart. And this is starting to make a bit more sense. All right, so if I put a marker in here, and I'd want to see this breaking past this area here, yeah. So again, it will become more apparent when I put it on a 1-hour chart. But you can see these points at which it turns here, and here, and we want to be waiting until it breaks past that point, all right, and then we can capture a movement like this, or even, you know, if we're lucky enough, we catch a bigger movement like this one, or this one right up to the top, and once we're on that, we can kind of stay in it. It gives us room to breathe, so to speak. So there we go on the hourly chart, and now you can see, hopefully it's starting to make a bit more sense as to why this area here. So I would set this actually at 200, all right, and that's the area where I'm going to start getting interested in placing trades. If it breaks past that, I'm not going to be interested in this unless it actually breaks past this point. Okay, or at the moment you can see it is pushing to the downside as well. This is not a bad, this is not the best pairing to be trading on, because the euro is quite strong at the moment as well. So what you want to be finding or waiting for is a pairing that's slightly weaker, and I'll come on to that. But in this one here, there's not enough. There's too much either side of this for it to be worth considering for a trade at this point, I believe. So I'm going to eliminate this, and eliminating pairs that you're not going to trade is just as important, probably more important than the ones that you're going to trade, because you'll be left with those once you've eliminated the ones that are not in a good position. Now this this USD JPY is on a daily chart, and this is in a good position because the yen, although looking pretty strong here, and it has got much stronger, once this turns, it will turn in favour of the US dollar quite dramatically. And we saw it the other day. And we're looking on the stock indicator here, and you can see it's nearing the end of the daily chart. So let's just have a look at this on a, again, I'm just going to put a marker in here where I believe it to be enough interest, turning points, which is about there. All right, and if I go to a 4-hour chart, you'll see what I mean. This might seem quite boring and tedious, but I'm telling you, it is absolutely part of your trading process. It's the most important part, because this is where you're going to discover whether you've got opportunities in the market, which I didn't today. There really hasn't been much going on at all, which I thought would be a good time to demonstrate this. So look, on a 4-hour chart now, we can see a lot clearer. This yen has been very strong, and it's going to be trying to push past this 111 point. It is just here. All right, this 111 point just there. That's where it's trying to break through. Okay. Now, I don't think it will, but we need something to happen when New York opens to stop that happening. If it does break through, this would be a good trade in favour of the yen. But I don't think, looking at this, it's going to happen, because the Dixie's getting stronger now. You can see that on a 1-hour chart, and that ultimately would mean the US dollar gets stronger here as well. So if we change to a 1-hour chart, there we can see it is actually starting to look like it's picking up off that point on a 1-hour chart. So then I'll reassess where I want my entry point to be, and it's here. It's just here, probably at 500. Okay, we could probably go a bit tighter than that. If it's getting up towards this area, we could probably go in at around 400, even less than that maybe, but it might turn back. Yeah, that's what we want to avoid, is placing a trade that's just going to turn on us as soon as we placed it. So that's where I'm going to start wanting to take an interest in this at 111,400. All right, so once it gets up to around that area, I'm going to be very interested in this trade. And as long as the Dixie, if we change to a 15-minute chart so you can see it, is following suit there, it's getting very close to that area that we want to be taking interest. And I think that's when we're going to start seeing this pull away. And you can see the area that it wants to pull into, it's here. This is the sort of movement that we want to capture, something just like that. Okay, so we need to be patient and just wait for that to occur. But that's really how I identify a trade opportunity. So this one, yeah, you can see where it's just hitting, it's moving between this area here. I could put another one here at the bottom, which is ultimately would become my stop loss. All right, which would be, I'll be comfortable with a stop loss there. All right, and then once it reaches that point, what I'd do is I'd set a target with the green line here, and this is exactly how I conduct my signals or generate my signals. And I'd be looking to take the trade first of all to here, and this is 11,600. All right, so first of all to that point, let's just have a look on an hourly chart. Well, I think once it breaks past there, we're going to be able to take it quite a way. So I'd be a bit more generous with this take profit level. I mean, we could, if you wanted to be safe, we'd take it to there, but I think this could go all the way to here. All right, just below. So if we took it to 111,900, just there, and that is this stop loss here. We're on a 30-minute chart, so we could probably get away with setting this a bit tighter once it moves up to this point. So we could take it to around 1100, or just shy of that, say 950, to be on the safe side. All right, we need to give it room, because there's a good chance that there'll be some volatility around this area. What we certainly don't want is it dropping back far enough to bust our trade before it's made us any money. Okay, so don't worry too much about, if it does go the wrong way. First of all, as long as you're confident in the overall movement of the trade, then you can leave it in there. And this is the way that you're going to start making larger profits if you're leaving your stop loss looser, because as soon as it busts that stop loss, you've lost the trade and the money. Okay, if you just give it enough, all right, give it room to breathe, so to speak, then it will pay you back in the long run. Okay, you're going to lose the odd one doing it like that, but the majority of them, as long as you've done your analysis right, as I'm doing now, then you should be well okay with those, the majority of them anyway. So looking at a 15-minute chart, and this is what I always set my signals on. So this would be a movement from here, All right, and this is where I'd look to enter this trade. And in fact, looking at this now, we could take this higher, but if we set the take profit level there to start with, and that's how I place my trade. And then I'd simply, once it gets to that point and I see it starting to break away and follow this line here, I would then go to my broker window, USD JPY, and I would simply enter the details as I have there. So new order, and I'd literally replicate what it says there. Let's just have a look. So put these in here, 110950 and so on in here, and then take profit level. I think it was at 111. Let's just have a look. 111900. So there's a fair amount of movement on that there, and then just buy by market. Make sure you click the right way. When it gets to a point that you want, you're then ready to place that trade. Okay, and I would treat each trade like this. So if you're going through a process of analysis and you get to a point where you think, yeah, this is a good trade to place, and then just be patient for it to reach the level that you want it to. Don't get tempted because it is moving upwards to place it beforehand, because what could happen at any point here, you could see it turn here, it could definitely turn here, but there's a few points which this could turn around before it reaches that point. For me, once it gets to that point, it's telling me that the dollar is strong enough, all right, to support that movement right up to our take profit level. Okay, so that's the USD JPY. Hope that's all understood. If you've got any questions on any of this, you can join our free chat arena via the link. It's a Telegram app. Very simple. Just install Telegram, follow the free arena link, which is in the description below, and you can ask me any questions you got. I'm happy to call you back, or you can ask questions in the comments below this video as well. So there we go. That's the process. Okay, now it is just methodically working through these. So now I've got that set up ready. All right, if it gets to this point, I would place a trade, and that would automatically generate a signal that will go into our signals channel right here. Okay, it basically goes through to my Twitter feed, and then I just copy the Twitter link and paste it in here, and it shows all the details, as you can see. All right, so that's exactly how I generate a signal. Now, GBP USD. So again, we're starting on a one-day chart. We can see the US dollar has pushed this to a point now where it could well break through here. If it does, it's likely to push right down to here. So this could be a very good opportunity. You know, I've met some very experienced traders, and they will tell you to always follow the trend, but there are some points where you just go, well, this could turn. But it is more of a risk to follow a trend that's turning, no doubt about it, than following one. So what we'd like to see here is this to continue on down. And at the moment, we're looking for it really to break past around there. Okay, let's change the color of that to blue. Ooh. So we're looking for it to break past there really, and it's trying to do that. You can see it is really trying to do that, but just today has gone a bit sideways really. There's not much we can do. That's going to happen from time to time. We tend to get that sort of movement mid-month often, or after a point where there's been a lot of big movement, a lot of big events. We get this sort of sideways movement where everything is just calming down again. So to 4 hours, and now we can see a bit more clearly this blue line, this ideal entry point that I've put in here makes a bit more sense. And we don't want to be placing trade when it gets to this point. We want to let it get past it. So my comfort zone on this would be somewhere around here, in fact. Yeah, although this is the point that it will be trying to break through, which is at 1.30500. In fact, if we change that, you'll see. Yeah, just there. Okay, so you can see how significant that is, both top and bottom, support and resistance, showing the significance of this point here at 1.3500. However, we do want it to break past this before placing the trade, so my comfortable entry level would be around here. All right, the danger with this, the only danger with this is if it moves quickly, you might be blocked out of placing the trade. All right, so if we go back to a one-day chart, you'll see again just where this could go if it gets past that. This is the sort of movement we want to capture. I can't see that happening because this was post-Brexit, yeah, and I cannot see it getting down to that point. So it just shows actually that the pound is not in a bad position really, all things considered. There's a lot of other currencies that are a lot weaker against the US dollar. So for me, this isn't the best trade either. So I'm going to eliminate that. But again, I've gone through a process of analysis. I know why I'm excluding that from the possibility of a trade today. USD JPY looks good. USD CHF in a good position here because it is right up high here, and it did try and drop away before. Remember that the Swiss franc will be supported by gold as well, and gold works in absolutely the opposite direction to the Dixie, which we want to keep an eye on as well. In fact, we could open that just for 1 second just to show you. There we go. So, oh, that's not gold. There we go. So, when the Dixie's moving up, the gold is also, sorry, when the Dixie is moving up, this is moving down, okay? So it works in absolutely the opposite direction. I'm just going to show you how similar they are. So there's on a, let's put them on a 1 hour chart. There's the gold US dollar pairing. In fact, this has moved down quite a lot today, and it looks like it's pushing on further, and it probably will do. This should continue right down to around 12.10 around here in the long run, but we want to wait for the US dollar or the Dixie to start moving. So that's a daily chart look, and if I show you the Dixie on a daily chart, it's almost opposite, almost exactly opposite. So two things that you want to keep an eye on, certainly this. So I'm going to speed this up. You get the process really, and I'll just methodically work through these. Again, this is in a good position. The Canadian dollar has strengthened against this. I'm just looking at this one here, USD Swiss, and if we put in a point, and these are all starting to move in favour of the US dollar now. So they're getting to a point where I might be interested in placing a trade on this. I'll be looking at placing this around that point there, around 99500. And again, if we go into a 4 hour chart, you'll see the significance of that. In fact, a little bit higher. You'll see where it breaks past this point. So we're probably looking at around 600 maybe as a safe point to enter that trade. Even then, it's not a great opportunity. You can see it is trying to break past this level here. So arguably, we'd have an opportunity right there. Let's have a look at it on a 1 hour. And this might work with a fib retracement on it, but you can see that is definitely the turning point there between, or somewhere around. It's a bit of a grey area because they do overlap a bit, but this is starting to look like it's in a good position. We'd be following the trend because you can see it's been pushing up, and it is trying to get past this point here. So this is where it's trying to break through, and it's almost there really. So let's go through and look at this as if we're going to generate a signal. Look at that, trying to press through there. So that is where I'd be comfortable placing the trade if it went to this point here, around 500 and beyond. That would be a comfortable level for me to enter this trade in favour of the US dollar. So again, what I do is I look for a stop loss level, and I think around there would be reasonable. And then we look for a take profit level, which we need to make sure that we're looking at least a 1 hour chart on this for a decent take profit level. And what we want to be doing is being patient enough for it to break through here. And I think we've got to be a bit more generous on where we enter this trade. You can see where it comes back fairly regularly from here. Once it's past there, doesn't seem to return. So I think for me, yeah, it's going to be working to get back up to this one level, which is, if we look on a daily chart, is where you can see it's always trying to get back to eventually. All right, so that's what we want to be looking to aim towards, that level there, and we know it will get there eventually. We've just got to pick it up at the right time, but it's certainly moving in that direction, and I think this is a pretty good opportunity once it gets to that level. So 15-minute chart, and I'd look to place this from there, from 500, I think, once it breaks past there. We want to make sure it actually has, so even letting it go to there before, it might seem like we're losing a lot of the trade there. We are losing a bit, but what it does do is guarantee that it's definitely going to continue up. All right, so it's always better to do that. And sometimes if you can see it starting to travel quickly, you can get the trade in there, but just remember, if it starts to turn back, you're just going to have to pull that trade again, and it could earn you a few quid, and that's just scalping until it gets to a point that really we want this in there for the long term. So there we go, and that's where I'd look to place that trade from. So again, just getting these signals prepared, and to generate the signal, as I say, I just place the trade. It automatically generates the signal in Twitter, and I just share it with you guys. They are public on a Monday and Wednesday, as I've explained before, and that's just until the capacity is full on the trading arena. All right, so it is one of those days really, but hopefully you get the gist of this, how I'm generating the signal. Someone asked me, how do I do that, or how do I know, how you've got to that conclusion. Let's say I've just joined and looking at it and I want a bit of background on it. Well, this is what I do, and I'd be doing it pretty much all the time if it wasn't for the fact the markets are so flat today, but they really are. So just going through, and the same principle again on here. So I basically use the MT4 for trade placement. All right, that's where my accounts are held or managed, but in terms of the analysis, all done through TradingView. My tools, I've got a currency heat map here, and you can see in red the weaker currencies here. This is a 30-minute chart. The stronger ones in green, and so you can see the euro is strong. I was right on that, but we should start seeing this, and that's why the US dollar is, because these are against the US dollar. Okay, so all of them against the US dollar. Again, just demonstrating how pivotal the US dollar is to the rest of the markets. But yeah, this is worth having up because we can see here probably we shouldn't be trading the US dollar against the euro, but certainly could be against the yen very soon. And what else did we look at? The Swiss franc as well, Canadian dollar. So these are all good signs of where we should be placing our trades. All right, or certainly give us a better option as to where we should place our trades. So for me, it was like yesterday, the USD JPY and the USD CHF. These are the ones I'm going to be looking at taking advantage of, but I'm pretty sure the USD Canadian will be in a fairly good position pretty soon as well. We can see because it dipped back and now is piling the pressure back on this US dollar as we head towards New York opening. I'm not going to do anything until that happens. You'll see here that we have got a few events. The manufacturing PMI services PMI for the US at 1345. This is on GMT, so time at the moment just approaching 1300. All right, so we have got these to come, and I will wait until they're released. There was big movement as a result of this euro data this morning, and it did catch me out on my trades. Actually, I had them placed, and yeah, so it cost me a few quid, but it's going to happen some days. We'll be back to it tomorrow, but I thought this would be a good opportunity to show you the process, so to speak. So there will be another module of this tutorial, and the next one will be on how to set up your MT4, just so you can see everything clearly. In fact, I'll do the same thing with TradingView, so I'll show you how to set up your TradingView so it's nice and clear like this. The right parameters to put your stock and RSI in, should always keep an eye on them as well, by the way, and how to set all these up. You do have to have a paid account, I think, to have this list of currencies on the sidebar here with what they're doing. But paid account isn't much on TradingView, and it's well worth having if you're going to take this seriously. We have still got an offer 249 for 3 months, and that includes the dedicated signals channel, the exclusive trading arena, any live broadcast, webinars, which should become interactive fairly soon as well, and it will give you access to everything that's contained within the website once it's finished, and of course the course. There was a course, Forex course available for you, and I insist that everyone coming in takes that. It really will get you to a point where you understand the markets much better, and it will reduce your risk, and it will cost you less money. That's the fact of it. And then yeah, you can be part of the trading arena and trading with us on a daily basis. And look, I'm a realist. I'm not going to pretend that every day is brilliant. Today is one of those days. We just have to step back, do something else. You know, you can study, you can do lots of stuff, or just go and relax and do what you should be doing with your family or whatever it is. So this is what trading's all about. It's about capitalising when the markets are right, and then we have the time to do what we enjoy when the markets aren't so good. And you should be making enough from the times that are to support the times where you can just go and enjoy yourself. All right, thanks a lot. Thanks for joining me. Hope this has been beneficial. Comments below, please. If you do want to contact me, then all the links are in the description. Thanks a lot.